Hey guys, hopefully everyone is doing well. Today's target is to solve question number 8. The chapter which we are related with is cash flow statement. First step is to see the shape of this question. As usual, we have been given assets and liabilities, and there are 2 years. And please note very carefully that this time our opening assets are given on left side and closing assets are given on right side. In previous two questions, opening were present on right, closing were present on left. We will be starting in the similar way. This is our performa where above or upper side is fixed for current assets and lower side is fixed for fixed assets. Current liabilities upside, fixed liabilities lower side. So we are now ready to start our question. From here, opening and closing cash are given. This cash would be used for the test or check. 40,000 is your cash opening and 44,400 is closing, and you can see the amounts 40,000, 44,400. So here this answer should automatically be present in closing cash after putting cash flow, which is over here. Right now it is 0 because nothing has been posted. Next, account receivable 10 and 27. So here 10 and 20,700. This is our account receivable. So here we are going to write account receivable. Next, inventories 15 and 15. So we are going to put 15,000. 15,000. These are current assets. Inventories. Next, land, fixed asset, premises fixed, plant fixed. So it means they will be written later on because we have fixed the lower portion for fixed assets. We are now going to leave asset side, and now let's see how many current liabilities are present in liability side. Heading is given current liabilities 30 and 32. Here you will write 30 and 32,000. These are current liabilities which you will be posting in this way. Now after current liabilities, bonds payable, long-term assets, discount with bond payable, it's long-term, capital long-term, retained earning long-term. So it means our current side has been completed. These are your current assets, current liabilities, after which instead of writing these fixed assets and fixed liabilities directly, we will be giving attention upon adjustment first. Adjustment number A, income is 10,000. As usual, we will be writing this income and whole this complete column will remain empty. This is your column fixed for profit. Net income is your profit, 10,000 you have posted, and that's all. Nothing would be posted in this column. After which entry adjustment number B is saying a building cost rupees 4,000, book value 10,000, sold 1,400. When you will sell this building for 1,400, it means 1,400 is incoming, cash is increasing. You will write 1,400 where in plus sign. Why asset? Because it was building. So you have sold building for 1,400. Now next thing to understand is the book value was only 1,000 and you have sold it for 1,400. So it's a good news. You have sold this asset in profit. As you know that loss was written over here because loss was non-cash expense. Now it is just opposite. We have got profit. So it's a cash expense. So you are going to write on opposite side. How much profit? You have sold your asset for 1,000 rupees, for 1,400 rupees. Here we are going to calculate. Sold for 1400 while original or book value was 1000. So here you have posted profit. Please understand, when it was a loss, you were adding an asset. Now we have sold this asset for profit. That is why you have chosen the closing column. There were only two things which we are going to put: 1400 received, cash increase, debit, and we have written on opening side. 1400 was profit. Loss we usually write in opening, so profit would be written in closing. Next, C, depreciation, again non-cash expense 1800. So here non-cash expenses would be added, or we will write it in opening assets depreciation. We are going to add it, or you may choose this side closing. It is also added, so you may write depreciation over here. Next, there was 5000 issue of capital. Entry of issue of capital is cash to capital. Cash debit, it means cash is increasing 5000. Since it is capital, capital liability increase is to be written over here because it's add. So how much capital? 5000. You will be writing in add column. This is your capital. After capital, we have last entry, cash dividend. Stock dividend. Stock means shares. Shares are just paper. It does not mean we have received any cash. Cash dividend is basically the cash, and this has been paid. Dividend means amount of profit which has been distributed. It is paid. Cash decrease, and dividend is associated with capital. So we will use liability side, and since dividend has been paid, it's an expense 2000. Cash has been decreased, so you will choose column with the minus sign. How much dividend? 2000. We will write over here 2000. Okay, all adjustments completed. Now we will see what are those fixed assets and fixed liabilities, adjustment of whom was not present. First, land. There was no adjustment of land. Look at here, only adjustment for building was present. So land 4 and 4. Here you will write 4000 and 4000 for land. Now next asset is business premises, and it has already been decreased. It means depreciation has been charged, and we have already written depreciation over here. Next, plant and equipment, and look at here, plant is increasing, so it means depreciation has not been charged over here. So 15 and 17, 15,000, 17,000 opening closing. It was plant 15, 17. No, okay, plant and equipment. So that's all. We have written plant. Now next, after plant, we have accumulated depreciation. Depreciation has already been adjusted. Look at here, 800, which was given in your question. After depreciation, we have patents. There was no adjustment of patent over here, so we will write patents. Amount is 1900. So here 1900 is your patent. After patent assets completed, now we will see the next procedure. Bonds payable 2222. There was no adjustment of bonds payable, so we'll have to write it. Bonds payable, and amount of bond payable was 2222. 22 and 22. All right, bonds payable written. Now next is discount. Please understand, discount was 2000 and 1800. Difference is 200. Discount is non-cash. Depreciation is non-cash. Loss is non-cash. So again, it was a discount, and non-cash expense, non-cash expense would be added. Since it is related to bonds payable, means we will choose liability side and will add. So here is add column. In liability side, 200 was discount. It was bonds payable discount 200. After which we have capital, and capital is already adjusted. Look at here. Capital is written. Retained earning has no effect because you do know retained earning is the amount which is retained, not moving out or in. Alright guys, so finally what we have done, this was your answer because I have already put the formula over here and how you will do it. First step, you will add all opening, closing, opening liability, closing liability. These are sum and this is your profit. So what you will do, profit plus opening minus closing asset minus opening liability plus closing liability, you have got this answer. And you have posted this answer over here. So opening cash was 40,000, add 4,400. So you have got your closing and exactly it has been matched. It means all entries are correct. So guys, in this way, our question has been completed. As you have seen that our check is also completed. Our answer is exactly equal to closing cash. It means solution is in front of you, but still I am requesting to you to have a good practice of this question. If you feel anything difficult after practice, you are very open to share your problems through messages, text, or directly contact. I will be trying my best to answer your queries instantly. So thank you very much for your time. It's time to end our lecture and it's time to say goodbye. Allah Hafiz.